Welcome back to Golden Roll Radio. We're going to start this week's show with the first quarter this year's numbers for gold, silver, platinum, palladium.
Yeah, Robert, as we finished up the quarter last week, gold finished the quarter up about 1.2%. It went from 1278, closed the quarter at about 1293. Silver, on the other hand, was down 2.3%, started the quarter at 1548 an ounce and finished down to 1513 an ounce. Platinum was up 6%, started the quarter at 795 and finished out at 848. And palladium was the big winner with an 11% rise from 1227 all the way up to 1361 an ounce.
But one would also argue palladium was the biggest loser there at the end of the quarter with that big fall, which we will get to here in a minute. But first, I think it's worth looking at the Dow and the Dow transports because we have had some interesting action, especially when it comes to Dow theory this week. So, Robert, I know you've been following this pretty close. What do you think?
With all the talk about the pending recession that's coming because of the inversion in the yield curve, you wouldn't know the recession is coming with the stock market because we have a confirmed Dow theory bull market with the Dow transportation average coming to a new high and the Dow industrial average coming to a new high. However, it should be noted that this is not an all-time high, is it? We still have a little bit of room to go for the transportation average to get back to about 11.6, which is the previous high. And then the Dow industrials would have to get back almost over 27,000, 26.9 to get to an all-time high, which would be a bigger confirmation than what we just had. So temporarily, it looks like the stock market's probably headed a little bit higher, but I think this is going to be a highly speculative move with the stock market. So there's a lot of risk still there, but it looks like the stock market wants to head higher. Just be cautious.
I'm glad you bring up Dow theory. I was reading Pamela and Mary Ann Aiden's report this past week, and they like to look at the longer-term moving averages. They pointed out that the transports, which we have been discussing, has, and I would argue continues to lag behind the industrials, but the transports have actually pushed above that 200-day moving average. So they had been bouncing below it. The Dow had been bouncing above it, but they're both above their longer-term averages right now, which is part of that confirmation you're talking about. So moving over to the metals following our quarterly update on some price action. Obviously, gold continues to climb for this year, but has been stalled out. You know, we keep coming back to this high 12, low 13 number, hitting it earlier this year, not just in January, but also March, and here we are again. You know, each time we've come back here, we're a little bit higher than the previous time, but we're still sitting above it. So I will remain bullish on gold until we push at least below the beginning of March lows at about 1285, and then certainly below the January lows around 1275. So there are some good support levels here. We're still at around the 382 fib. There's a 50% line, the 682 just below it. And any of those numbers remains bullish. Obviously, up here at the 382 is arguably our best position. I'm not entirely set that we're going to see another massive push up before we get into our sell in May and go away season that Robert talked about last week. But until we see a little bit more action on the precious metals market or a continuation of dollar policy, I see us hard stuck here until some other event pushes us a different direction.
You mentioned bullish. I think you're talking about short-term bullish because I think long-term bullish, you are long-term bullish gold.
Yeah,
right?
absolutely.
So
I'm talking about the week-to-week moves.
Yeah.
It's a week-to-week show.
Week-to-week show, right? Yeah, I get that. So short-term bullish, yes. I'm going to stay bullish on gold even when gold possibly pulls back into the mid-1200s, around 1250, 1260, if we get that pullback. Eric mentioned, the first quarter numbers took gold from in the 1270s up to the 1290s. That's not a big move, but what's significant is we've been holding in that above that 1285, 80 range. And now on this pullback, we've stopped right at that level. So even if we break this level, I think in this kind of coming into the seasonally weak time for gold, May and June, I think we're going to still see it holding in this 1250, 1260 range. And I'm going to stay bullish with it.
And again, anything above that 1240, 618 fib long term, like you were separating out, the long term bull stays in effect. But lo and behold, given the way short term speculation works, recording on Wednesday, posting this on Thursdays, it's likely we may come into the office tomorrow and gold's down at 1275. So if you're listening to this and we drop below that level, Again, an expectation that's certainly possible. Hard stuck for a week at this price. Can see it go either direction. Anything lower above that 1240 line is another opportunity to push into the metals position, given some of the other issues that we're having to deal with the dollar over the next 6-12 months.
The last thing I'll point out with gold is the bottom trend line that goes from the base of December 2015, the low of 1,050, and then December 2016, the low of 1125-ish. If you draw a trend line through that bottom, gold has been respecting that trend line extended right where it is today. 3 times in the last about a year, it's respected that trend line. So that's a good note to say that we're at a baseline. We could push a little bit lower. If we get some weakness in here, this is the chance to buy on weakness.
Yeah, and as Robert said, there wasn't too much price action in gold over the first quarter, but there was in palladium. We started out at 1227, ended at 1361, but during that first quarter, palladium did touch 1600. So moving into the second quarter with palladium, do you think that we'll see the same volatility that we saw this past quarter moving forward?
Yes and no. Yes, from the standpoint of, volatility begets volatility, and you should start seeing some trade action. If 1600 was either an interim or all-time high in the palladium price, you should see a little bit of bull and bear fighting just to see where it goes from here. But it's a pretty substantial drop. I mean, $200 after about an $800 rise may not seem like a lot, but it's still a $200 drop per ounce. So, yeah, we certainly could. I'm gonna fall back on some seasonal patterns here though and say, the type of drop we just saw, maybe we see some volatility over the next month, then we move into summer and things kind of quiet out for a bit. But we do have trade negotiations in place. Obviously, palladium is a metal pretty specific just to a couple regions on the planet like South Africa and Russia, countries that we don't always have the best trade relationships with and certainly have the ability to close off the spigot whenever they need to. So yes and no, I guess, is the best answer I can offer you at this point. I mean, the chart definitely looks very Bitcoin-y from a couple of years ago, where you have this massive spike up at the end speculation, then a rampant sell-off, and then it returns back to the norm. So long-term, that's what we're all expecting, right? I mean, we're expecting palladium to eventually go back to its normal rising channel that it had been building over the last couple decades, and that's where the platinum-palladium play and the swap ratio trading that we've discussed comes in.
Palladium's sister metal, platinum, has been rising off of the bottom that it created just below 800, and we need to break 875. That is the key number with platinum, and it's getting close. It was up about 1% today on Wednesday, and it's moving in the right direction, folks. We've been recommending this, so don't miss out on the platinum move.
And Miles, let's wrap up the white metals with silver. What do you see going on with silver?
Eric, second touch down to around the $15 mark, a little psychological level there. Certainly that's the 50% line from the lows, or at least the start of the rise there at the end of November, beginning of December, to the recent highs in March. We're holding nicely above that $15 line, and move down to like $14.50 takes us to the 618 fib, and a lot of price action from November, December. So
I would love that to happen into the 14.50 range.
Oh yeah, absolutely, because that puts our ratio back up 85 to 90 range, as we're probably running out of time and opportunity in that gold silver ratio as things move higher.
Yeah.
So silver remains that sleeping giant, or in this case, the sleeping cheaper metal that everybody ends up running to when the general consensus moves back towards metals and people go, holy smokes, gold costs what? Maybe I'll buy some silver. So that's going to do it this week for Golden Rule Radio. We always appreciate you stopping by. If you like what you heard, hit the subscribe button, ring the bell, and give us a call at 800-525-9556. We appreciate Eric coming in and giving us the metals quarterly numbers. So if you'd like to speak with one of our advisors here to discuss your own portfolio valuation and performance over the first quarter of 2019, that phone number again, 800-525-9556.
You can find us on Twitter at ICA Gold, Facebook at McIlvaney Financial, or you can learn more about what we do at McIlvaney.com. Thanks for listening.
Have a great weekend.